All right. Good morning. It is the first market review of bull cat trading. It is Sunday, March 10th at 12:22. I wanted to get this out before Sunday open. Pretty much just going to be a generalized review of market price action last week, NonFarm payroll. Want to jump right into this thing, and that way it don't take too long. So, first thing you can see, price action for Monday. Run straight down. We have a buy side imbalance, sell side inefficiency here. Run straight through it, down into a daily bullish order block. Why is it a bullish order block? Because it's the last down close candle before it changed their delivery. Going up, it forms a fair value gap. And we have huge displacement. So we look at that to act like a bullish order block later in the week. And I do apologize. I decided to do this recording outside. Weather's nice, windy, warm, cool day, whatever you want to call it. But this was great, so yeah. So that is the daily. So we drop down into the bullish order block, and to be more specific, this candle was high, this candle was low. The midpoint of that mean threshold, that is the midpoint of a bullish order block or order block in general. See how price respects that level. Closes here, right? Yeah, almost looks like it closes right under it. But then the following day, we drop down, don't even touch it. The body, the open, is right at the first quadrant of that order block. And then the following day, we drop down, we tap min threshold. I apologize. We tap min threshold, rally, close above the order block, and we don't even respect the main threshold of that at all. We just stab it and run up. So let's get rid of that. Well, actually, what we'll do is we'll just drop a line here. Not exact numbers, guys. This is just roundabout figures. You can do the work of that. We'll go ahead and label this daily order block. Okay, so that's the daily chart. And the second thing, if you notice how price the past few days, we've kind of just been consolidating at the upper range of this fair value gap here, this buy side imbalance, sell side inefficiency. All right, so just notice that bounce around in there, and then we rally. Still kind of other than this inside day, kind of in a stale range here. It's kind of all in this area from this high to this low. Essentially, price is kind of just sticking in there. Let's drop down to the 1 hour. We'll break this down and kind of, I want to get rid of some of these things that'll help us further down the line. Actually, one other thing I wanted to notate on a daily is this volume imbalance right in there. And then also we have a new week opening gap. Of course, we want to see that new week opening gap act as a magnet and support and resistance. Can do it multiple times in a week, so that's something that you want to extend on your chart throughout the entire week and even into the future, because I mean these levels can be respected even months ahead of time. Drop back down into the hour. Main thing I wanted to point out is volume balance here. Obviously, we get buy side delivery, on Thursday, but just remember we need price delivered both ways. So we have Thursday, Friday's trade in. After Thursday, we close above it, balancing it with sales for buy side delivery. On the way back down, we get our sell side delivery, and this is now a balanced area. Okay, and one thing we do want to keep in mind with how our price opened on Sunday and how we trade Monday, Tuesday. Should the market want to, drop below these lows here, those relatively lows, of course, first target would be we need to see closure above consequent approachment of this buy side imbalance, sell side inefficiency, because right now Although the although the market definitely retraced a good bit on Friday, um, I can't say that I'm convinced we're done with higher prices. Although I could see us needing a retracement to balance this out. We also need to balance this area. And of course, just like I said, with these volume imbalances, we need buy side delivery and we need sell side delivery. So everything in here, and we have multiple volume imbalances that you can mark. We have this one here between these two candles, and then obviously this large range here that would need to be balanced out. Okay, so I think that'll be enough for the daily. 1 hour. Of course, we'll come back for what we're anticipating price come Sunday, Monday, all that good stuff. But let's just kind of want to make this as quick as possible. So while I'm scrubbing along, one thing that obviously you want to mention is, and what you want to have in your mind on these non-farm payroll weeks is typically non-farm payroll, as we can see here, we open Sunday, and on Monday, the typical characteristics are they're going to run right out the gate in one particular, point of the marketplace, and they're going to just run prices quick, aggressive. It's going to be a quick move, and obviously we see that here. Monday we open, throughout the week, Monday, Tuesday, and then Tuesday, you see we drop into that daily order blocks main threshold. Okay, we take out this sell side here. We completely balance the remainder of this busy buy side imbalance, sell side inefficiency, and then we drop into this order block here. But more importantly, what I want you to see is, if you're not familiar with ICT concept or algorithmic trading, whenever you see, especially on the hourly chart, on the 5 minute or 15 minute, it'll be more candles here. This is the hourly chart, so not much, but price is fractal, so you look for the same things. From this candle's low to this candle's high, with this one pass up, with fair value gaps formed on both sides. From this candle's low to this candle's high, I am looking at that as a balanced price range, meaning price should not come up just to come back down and blow through this level. No, when price comes back to here and the mean threshold of the daily order block, you see price it keeps at bay. It's not going anywhere. The algorithm is looking at this as a balanced price range. It's going to move from this area and it's going to expand higher. And then of course, you can look at this as a breaker if you want. You know, potato. I look at it as mitigation block, but a breaker is a mitigation block in common sense or order block theory. But this level here, you'd be looking at this. More specifically, I like the wick range here, and you see how the bodies of these candles essentially close in the top range of that area, of that mitigation block. Okay, where any trader that went short here, they're trapped on this immediate run up. They're trapped. Trap traders in this balanced price range. Price runs up, and then price returns back down. This is a section to mitigate your losses as a trader and get in the move going up higher. Okay, so this is Thursday's trade in. Of course, Thursday typically always a day for potential reversals, as you can see here. We try to get up here, but just doesn't quite get it. They decide to save it for Friday for us. But here would be our buy side liquidity. Go ahead and make that a little blue. I'm doing my thing away from the boys. Alright, so there is our buy side liquidity there. these relatively equal highs. We just go with the higher one there. You see we bump up, we take out this set of highs, but obviously the larger liquidity pool of buy side is here. What are we gonna do? I'll leave it like that. Alright, so this is a 1 hour. And obviously, of course, you see Thursday, we drop down, we trade into a little fair value gap there. Okay, and then we rally up, consolidate. We have a new day opening gap form overnight. We consolidate in the upper range above consequent encroachment of that wick. Rally. We return back to it. We treat the new day opening gap as support again. Trade down into about consequent encroachment of this wick. Again, fair value gap is also here. Come back up. And let's drop down into the 15 minute from here. Come. 15 minutes, essentially just a little bit more dialed in from the hourly chart. Now, one thing that obviously with the new week opening gap, we want to see that act as a magnet in price multiple times during the week. That means it's going to act as support, resistance, off and on, off and on. And ultimately, that was a target despite how terribly I executed on my trade, which I will post on my Instagram page for verification. Not nothing I'm happy about, but that's the way cookie crumbles. But here we see, we look to the left, below this sell side liquidity pool here, and here. And of course, this being the sell side liquidity pool during the 8:30 news drive and NonFarm payroll dropping. But to the left, we have our buy side imbalance, sell side inefficiency. That is our 15-minute level. All right. And we'll go ahead and label that. So of course, price drops into that. We would look for that as a potential for price to want to turn around. And for me, I kind of interchange BISI, fair value gap, or a plus sign, or bullish or bearish. But that is our 15-minute buy side imbalance, sell side inefficiency. That runs back into at the end of the day before it rallies up, from the 1:30 time period into the close. Then we get another retracement down. Okay. Now, essentially just an extension of what we saw there. Now, of course, this is 8:30 news driver, NonFarm payroll. We want to get the consequent encroachment level. Again, just a ballpark. We're not precise when I do these. Free time, of course. We want to get the exact level on the charts, map them across. But we want to see this here. So much time to charge. Okay. All right. Make that I'll make it black. I'll just label it. Now, that is our 15-minute. That is our wick consequent encroachment. I will set at 8:30 just so we don't get lost. And then we're going to drop down to a 5-minute, kind of breeze through that, but drop to a 5-minute, then our 1 minute, and then my closing thoughts. Let's make this a quick one. It's already kind of long, so okay. One thing I do want you to see, and that is scrub back. So non-farm payroll, typically I like to look at, especially everyday trading, power of three. Power of three, meaning with the idea of the daily candle in mind. If we're looking to be bullish, we want to see price drop below midnight open price to some sort of discount array, take out some kind of liquidity pool, and then we'd like to see it rally, and then, expand throughout the day, and then we would see a retracement from that high into the close. So I do want to mark that. That is our midnight open. That is something that you do want to use, and you will have the highest form of probability if you are looking to go long, buying under midnight open. If you're looking to go short, you want to be short and above midnight open, okay? So that is for notes. So that's gonna be that yellow dotted line. That is our midnight open. So we see for midnight, we kind of just slowly grind up, and then we break down, bar imbalance here. It doesn't want to close above. We drop down lower, go under midnight open, but it's not a big movement lower. It's just kind of like a mild retracement. And then again, we rally up into a premium 8:30 news driver. Typically, it's a two-stage, 1-2. They run one side of the marketplace, take the liquidity, then they run the other, and then typically it'll consolidate or move, kind of sideways, and then it'll run again, and then essentially at that point, the market makers, they're running it where they want to, and it's your job to figure out which side of the marketplace that is. So of course, 8:30 is another time that you want to plot on your chart. 8:30 open, that is the CME open. You want to have that and midnight marked on your charts. So this is 8:30. Obviously, opening prices here, midnight there. We rally up, up, up. We finally take out this buy side liquidity pool, and then we break lower and come through new day, open a gap. It treats it as almost as a form of resistance. As we fall down, we break through the 15-minute consequent encroachment of that wick. And of course, tumble, retracement, fall again by the end of the day. Now, let's drop down into the 1 minute for all the nitty-gritty details, the trade that I took, and go from there. And then we'll take another look at the daily chart to kind of see where I think price could go this week. Obviously, nothing's for certain. Sunday is kind of like the determining factor of that. But like I said, power 3, if you're looking to go short, you're going to want to see the market move above the midnight opening price, and especially after the news driver. After the 8:30 news driver, how we react at 9:30 open, okay? So we retrace back after, running a stop from both sides. Anyone that was going long here, they're knocked out. Anybody short in here, they're knocked out when price comes up. We consolidate a little bit. All right. We take out a liquidity pool here. Low, high, lower, low. Extend that through. Last up close candle. We extend that through. We're just going to have that entire range. Okay. You see right here. Highs broken, so you get barely anything out of it, but a couple tabs. Main thing would be this volume imbalance. You'd want to see this stay open here, and then see this form as, almost a breakaway gap, but mainly you don't want to see price close below here. I don't want to see that fair value gap traded into it all. Okay, so we rally off of this, go higher, 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 clear buy side out. And then out of 2022, okay, so we have a slow grind up, market finally shows its hands, displacement moved lower, okay. This is the swing low that I wanted to see taken to confirm what I wanted. So as you can see, market drops down lower, returns higher. Now what I was thinking is we are above 8:30. We are above midnight open. We are in a premium, okay? Price, power 3, going up to go down. So with this, on top of this being, if you pay attention to my snippets, This is the 1050 to 1110 macro hour. Okay. That is a short list of commands at very specific times of the day. There are multiple times, but 1050 to 1110. That is when, if you can see what's happening in price, you can find a very high probability, lowest trade if you understand what is going on in price. Okay. This fair value gap as a potential target, but if you understand, which I will make a video on, the PDOA matrix, you'll understand that the hierarchy of the PDOA is fair value gaps, order blocks, rejection blocks, liquidity voids. The hierarchy of that, mitigation blocks, are one of the more higher up of the PDOAs. So mitigation block, this is where I entered the trade. Like I said, you're going to laugh when you see the screenshots of my executions, but this is where traders who are offside, who wanted the market to go up, when it comes back on them, they're trapped. This is your mitigation block. Okay, extend that through. You see price consolidates all throughout that mitigation block. Traders are trying to get back on side, and then finally market gives, drops easily, target under midnight open price. Okay, it falls down. You have another mitigation block here. Okay, anytime you see these big moves up, following after a down close candle, assume that that has a chance to have some sort of way of becoming a mitigation block or point of entry for continuation lower or higher, depending on where it is. A bearish mitigation block, you're looking for the last down close candle before the move up. Essentially, what you would think would be an order block would be a mitigation block when it's failed going lower. Okay, and that's another thing that we'll go over is order block theory. Straighten a lot of things up that people get confused about, but that's the main thing. So we run through again. You want to look for these new day opening gaps and these new week opening gaps to act as some sort of resistance, support, respected throughout the week. You want to have those extended through time. And we fall lower, 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 of course, until we reach right here. That's that 15-minute buy-sell imbalance, sell-side inefficiency. Okay, that we labeled earlier. We trade through the new week opening gap, bounces around, finally gives its hand, drops down lower. And then here we have this price action here. Okay, we have market structure shift higher, taking out this swing high here. With this move, we get our fair value gap. All right, overshoots it, drops down into this order block, and then rallies higher. Now, of course, while you're thinking, while we're on the topic, this entire range here, this entire series of candles, you would look for a return of that as well. Okay, but that's not something I would have looked for necessarily as an entry. Not this. I do like when you see this pair, how price moves quickly in a rush to go up. This gives you a possibility for a potential scalp here. New week opening gap acts as support again. Rallies higher. Of course, order flow is still bearish. I looked at this as this candle here, this candle high, this candle low. I would have looked at that to be an inversion fair value gap. See how price kind of trades into it, supports around, consolidates in it before dropping lower. That is another area of where I want to see it act as resistance. Okay, not your typical retail support and resistance, but you see how that's it's respected very nicely there as that inversion. Okay, so this is the first video, and I'm definitely going to put more detail into the coming market reviews, but it's kind of a rushed run. It's a Sunday. Wanted to get it out before market opens. let's go back to the daily chart and actually let's take a look at the weekly chart. See what we have in there. What do we have? Okay, so of course we have our annotations there. So one thing that I would say take a look at, and you want these levels on your chart. This down close candle here, you do from that high to this low. You want to get all quadrants of that throughout the week. So it's 75%, 50%, 25% down here. You want to have those extended through. And on the weekly chart, okay, let's go back to the daily. Okay, the daily chart. If we close below 50% mean threshold of this candle, and if we close below the 50% or consequent encroachment of this wick, those two would be big signs of price going lower. I'd like to see, as of now, we were consolidating, essentially bouncing around the consequent encroachment of this daily BISI. It's a lot of sales stops right there. Wouldn't be surprised to see if the market want to just push through there. Another thing is, if we're really just going into some kind of retracement, like I said, I still see higher prices, but the mortgage climate right now isn't suited for, Anyway, my main thing is I want to see continuation. I'm waiting for Sunday to let me know where the market is right now. I wouldn't be surprised, like I said, below main threshold, below consequent encroachment of that wick. I'm looking to potentially rebalance this area here. And of course, we have two volume imbalances here, not just this one big area. We have the separation where only the wicks overlap in here, and then from this candle to this candle. So both of those you should have on your chart. And let's see what else is there. Obviously, of course, if we do drop down into the consequent encroachment of that wick, and we rally, then we just continue to see higher prices. With times like this, we don't know. Okay. Okay. We don't know how high the market's going to go, but with seasonal tendencies, essentially every year the market tends to top out sometime in the spring. So we're getting close to that. So normally April, May, you'll see the market top out in one of the indices. So you want to look at your Dow, E-mini S&P, your NASDAQ. Collectively, this channel is going to be predominantly NASDAQ. That's my ATM. That's what I like. I'll briefly, I'll use intermarket analysis on other things, but predominantly market reviews are going to be on the NASDAQ. Okay, but typically springtime, April, May, second week of May, we'll see prices kind of start to tank. You'll see a failure in one of those indices. And from there, it's just run into those summer lows and just ride the coattails of sales cycle. I guess that is it. We'll see. We'll see if we can do a small little review after the market open, or wait till Monday. But for now, every Sunday, we for sure will be doing these weekly market reviews, especially these high impact news drivers. But till then, that is it. And I will talk to you guys next time.